Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, September the 11th, 2017. Hopefully, everybody is safe down in the Florida way with the hurricane coming in. My name's Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking us out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here on the go-to and live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So take a look at our trade plan for Friday. We are looking for responsive buying up into the value area, and then somewhere between the naked VPOC and the naked close, we are looking for sellers to step in and rotate us down and continue the auction down. We basically were in play, hypo A, hypo 1, I should say, until we got to about this point, and then they just didn't let it go, and then we just went sideways and just couldn't get that liquidation break. I figured that there would be a liquidation break going into the weekend due to the North Korean threat of a missile. I don't even know. I've been busy all weekend. Did they even fire a missile? I'm not sure. I don't think so, because with this gap up on the Sunday Open, I doubt it. But basically, we had another almost another inside day. We went down to 56.75, so we only got 1 point below the prior day, and the 2 days prior to that, the Thursday and the Wednesday were both inside days. So they really, they created a very Gaussian distribution on those 3 days. And then what happens over the weekend? We gap up. But before we get into that, let's just take a look at the economic calendar for the day. We've got some news coming out of Europe in 9 minutes. At 11:30 Eastern, we have the 3-month bill and the 6-month bill auction, and then at 1 o'clock we have the 3-year note. So no real scheduled economic news. I want to go over to the Forex Factory for just a second here. It's just quicker to switch to news going into the other days. So tomorrow, we really don't have any news either, except for JOLTS jobs and the 10-year bond. Wednesday, we've got PPI, and we've got crude inventories, 30-year bond, federal budget. The 14th, Thursday, we have CPI, core CPI, and unemployment claims. That should be a big one. And then Friday, core retail sales. So not a lot of news that's going to be a really huge catalyst that is scheduled economically this week. So let's take a look at the market, macro to micro. I always start with a simple candlestick chart. I use a 9 EMA, 20 SMA. I'm looking for slope and separation, strength of the trend, where the trend is being challenged, and looking for different patterns within the different time frames. Hold on 1 second. As some of you know, I'm still dealing with this flood, and it's causing my sinuses to go nuts because of all the mold and spores flying around. So we got good slope, good separation. The trend is very much intact on the monthly. On the weekly, you can see that we had the inside Mr. Sneaky. We were looking for it to close the technical gap. It did do it the next week, but it went down and tested the 20 SMA for the 3 weeks, and then we get back above the 9 and the 20 last week, and so far this week we're getting continuation. So we are getting a continuation pattern on the weekly. On the daily, you can see that there's a bit of a head and shoulder pattern here on the daily here. I've got it drawn on the 4 hour. We'll take a look at it because the actual measured move will be the same. But there's, you get the left shoulder, right head, right shoulder. We're back above the 9 and the 20, and we're getting slope and separation to the upside. So the trend is resumed on the daily, on the 4 hour. This shows the head and shoulder even better, but I've got it drawn up, so let's just take a look at that. So here is the left shoulder, here's the head, here's the right shoulder. I'm putting the neckline right around 74.50. You could use a lower neckline if you wanted. You could use, I'll draw from here too, so we'll get the 2, but I'm pretty sure that the this 38.2 target is going to be close to if I draw the neckline down here, but we'll take a look at it. But the main target, believe it or not, on this is up here at the 25, 10, 74. So if we get into the 2500 rule of 10, right? We've got a measured move there as well. But if I draw the neckline a little bit lower, just to be more conservative, and we bring it from right about here, and then do our extension. I still think where I got it is the correct spot. Oh, we've already showing we already hit it, but 100% extension is 93. It's interesting. Okay. I like mine better. I still think now it's on a larger time frame, so remember, it's we have to look at these patterns based on the time frames. It could be, a while, but the pattern will be invalidated if we break below 24.21. So you might want to write that down in your journal as an invalidation of that. You see though the gap up on Sunday night, and we've got a trend going in the overnight session, getting a little bit of weakness. So let's move it down into the smaller time frames. You can see that we're coming back and testing the 9, but the trend is still intact. We've got this big gap zone that we're going to have to deal with, and we're likely going to come back and close that gap at some point in time. So we gap down here on the prior Sunday, and now we're gapping back up on this Sunday. We're actually leaving a this last week below us and gapping up again. It's like an inverted island top, but I don't know of any island bottoms. I'll have to look that one up. That's not what I'm really familiar with. But the overall trend is back up. Our 30-minute, you can see that we had a strong trend, good slope and separation. They're consolidating. They tried to break the trend, and now they're coming back and testing the 9 and the 20 from below. On the 15-minute, we are still below the 9 and the 20. Well, we're above the 9. We're below the 20 right now, but we're in this consolidation. There's actually an inverted cup and handle. Let's see if that validates here. I do expect responsive selling this morning before we continue the auction up. So let's see where this gives us. Oh, first of all, let's see if it validated. I'm pretty sure it validated. So take the top of the cup. Yeah, it did validate. And then let's look at the extension. Now remember, on inverted, we go from the top of the handle. And it gives me a primary target of 24.70 1/4. Guess what that is? Our month open. All right. So the trend is struggling on the smaller time frame and just going down to the 5-minute. You can see that we've got a downward trend, but they've taken it back. So overall, the larger time frame trends are still up, but on the smaller time frames, we're seeing some selling stepping in. So if we take a look at this in context on the auction and the profile, we'll bring this in. So we create this balance down here. We come up, we break out, we accept value higher above the value area. We continue up, we accept value higher here the first 3 days of this price discovery, and then we come up and we create value higher. They fail, they put in a new all-time high. They fail to hold. They come back down to the first spot that they accepted value, and then come back up. We create this micro composite VPOC at 67.50, and then we go sideways. We put in a new all-time high. They fall out of value. They come down. We already came down to the 57.50 the first time. They come down to the second spot. They actually come back right to the VPOC, gap back up, try to come back to the last spot. They tried to hold value at 72 area, and then they fall out again. We already been down to the 34. We said we likely come down to the 24-22 area. This was different in September. It was up a little bit higher, but we come down here, we find our buyers, we come back and accept value where they did the first breakout, and then we continue the auction up. We come up, we try to get and hold the 70s again, they can't, and then we come back into this this distribution zone, and the VPOC has shifted lower. But now we gap up, and we're actually trading above the micro composite value area high right here, which is at the 69.75. And if you remember, 69 was the VPOC once when we were in this area before it shifted down to the 67.50. And we're testing the value area high of this former value area as we speak right now. So we're trying to continue the auction up, but we have a gap that we're going to have to deal with. It's a fairly large gap. So let's start taking a look at the overnight. You can see that the overnight inventory is basically 100% net positive. We have a huge gap up from the close. The close on Friday was 61. So we're going to have basically a 12 approximately gap up based on the gap rules. Let's just take a look at them quickly. I know I'm taking a long time here. Where's my gap rules? I'm not going to search for them right now. I think it's around 70 or 80% probability that we come back and actually fill the gap, that we don't fill the gap, with this big of a gap. So we've got a gap zone from Friday from 65 up to 66.75 in terms of the Globex, but when we open up in the RTH, we're going to have basically about a 8-point gap up on just the range. On the actual gap close, it's going to be about 12 or 13, depending on where we open. So let's just move our numbers over. Our high is 75. Our overnight low is all the way down at 66.75, right near that range high. And then our VPOC, which is not likely going to shift, is going to be 72.50. This should not be there anymore. All right, so we're going to gap up. Let's take a look at our levels. Obviously, 70. I'm going to bring this up. 73 and a quarter. And then we have 70. And then we have the 65. And then we have the 62.50. And then we have the 59. And our underline is going to be key line in the sand at 51 and a quarter. I had switched this, but I'm switching it back now that I take a closer look at it. And our key line in the sand above doesn't change. It's going to be that 80.50. All right, and then above us in terms of levels, there's really not much. There's 78. And that's it. All right, in terms of targets, okay, we've got the overnight high and the naked VPOC above us. Above that 73 and a quarter. This should be a trade level, not a target. Then below us, we have the naked close at 72 and a quarter and the naked VPOC. And then we've got the 70 level. Below that, we've got the overnight low with the range high and then everything down here. So quickly, I'm running long. Our hypotheses for today is for continuation to the upside or a hold of the break above. So my main hypothesis is an open auction out of range, seeing responsive selling down to close the gap. Oh, we got to look at the half gap zone. So if we look at 61 and trading 74 right now, if we close open around here, our approximate half gap is going to be 67.50. And that will change depending on where we actually open, but I just put it in as approximation and then adjust it. All right. All right, so hypo one is responsive selling down into the 70 to the 67.50 area, and then find responsive or initiative buyers and step up and rotate up into the 76 and a quarter and basically chop in this area going sideways between the 75 and the 80.50 with maybe a late day probe up here, but looking at closing somewhere in around the 70 to 72 area. So that is hypo one. Hypo 2 is a open auction, a finding initiative buyers on the open, coming up into the 76 to 80 area, finding responsive selling, and then rotating us down towards that half gap fill, chop around here, and then push through to try to close the gap down here, and possibly a late day probe down into the 60 to 59 area. And hypo 3, which is going to be equal weight, is going to be an open auction, out of range, a move down, failure to close the range gap, and basically just going sideways, chopping around the 75 to 78 area and having a tight 7 to 9 point range as we just go sideways. So that's hypo 3. And then hypo 4 is a gap and go. Failure to even take out the half gap, find initiative buyers right on the open, rip us up into the 78 to 80 area, chop around here, create a base, and then push up into equalizing the September and the December contracts, which are unequalized right now between 86 and a quarter and 88.50. That's my hypo 4, and then my alternative is complete failure to take out the naked VPOC at 76, come right down, chop around the open, the range high from Friday, and then push down through to 59, and then fail and push down into the 56 to 53 area. But I'm not giving that a lot of priority, not with how big of this gap is and the fact that we're trying to hold above the value areas of these two microcomposites. So that's my main hypothesis. Take a look at gold. You can see that gold has gapped down as the equities gapped up, gold gapped down. We're testing the value area low right now. And we still have a gap close down here, the close at 1329.90. The key line that I'm going to be watching right now is 37.50. If we get above it, I'm looking for them to rotate back up towards the gap and towards the microcomposite VPOC at 42. This is a $27 move down. We still have capabilities to move lower. If we fail to hold the 36, I'm looking for them to push down into the 32.30 and come inside of this VPOC and eventually work our way down, because that 23 is going to be 1323.40 is going to be roughly about the 38 point range that I'd be looking for as a counter rotation on the harmonics. I look for larger rotations of 38 to 42 is typical, and on a bigger retrace, and that's certainly capable if we can't hold above that 36 or bounce off of this 30 area. But I expect some rotations here and a push back up into the 45 area and towards the gap. Today is my main hypothesis for gold. That's going to complete our pre-market session. As I've mentioned and posted in the room, I've got numerous problems going on with internet and my trading because of the fact that I've got my house torn apart and I moved my router out from underneath me where I have had all my equipment and moved to temporary office that we set up for my wife, because her office was in the basement, and obviously I've got the basement completely torn up right now. Anyway, as always, trade well, trade safe, and we'll catch you on the flip side.